Let's welcome in our morning guest. Mayuresh Joshi is with us. Sajeev Dhawan is joining us, as well as Sumeet Bagadia is joining us this morning. Let's just go across to our morning guest. Sajeev, let's start with you. What do you make of the markets, the recent correction in the mid-cap space? Did it surprise you?
Morning, Pankaj. Well, it's been quite brutal over the last few days, up to the middle of the month. Investors, traders were all obviously very happy. The Nifty didn't do too much damage, and anyone in frontline stocks wouldn't have been too affected, but there was some significant damage in the mid-caps. If you were trading the stop losses, you probably wouldn't have been too affected, but I think what the market's clearly shown is that there is a bit of nervousness at these higher levels. If you're buying companies purely based on momentum and the way that the fund flows are coming, then you do need your stop losses in, and you do need to take some profits from time to time. If you're sticking to the frontline top 50, 100 stocks, where you know that the domestic funds and the FI money will continue to flow, then the correction should not bother you too much. And we've seen also investors over the last few days did buy into those dips. So the next few days, crucial for sentiment. We're at 9,500. There's obviously going to be talk of 96, 9,700 from the bulls. But the question is, what can take the markets down to 9,000? There's really no bad news that can happen. You've got the situation in the US with Trump. He might say something, he might do something, but even that has not taken the markets down too much. So we remain pretty bullish. We remain buyers of quality stocks on declines. And in mid-caps, yes, we've looked to lighten up and focus on quality stocks which have announced good results and where we see some potential upside over the next 3 to 6 months based on the continuing fund flows domestically and from the foreigners.
Right. Do you think that yesterday's up move could be because of expiry as well? So the trend, the buying has to continue if this move has to sustain?
Well, certainly there was a lot of short covering yesterday. You saw some very sharp spikes in a lot of the stocks in the last couple of hours. So short covering was certainly part of it. And as you mentioned, yes, this morning is very crucial that we don't fall another 40, 50 points in the Nifty suddenly, and that buying momentum continues. So the first hour will be crucial. We're slightly long in the Nifty at the moment from, I think, 94.60, 94.70 levels from yesterday. Our stop loss would be around 94.20. I think bears would probably look to short below the 9400 level. So if you're going long, maybe have a bit of a hedge, but a safer bet for the month probably would be to sell deep out of the money puts in the Nifty, whether it's 9,000, 9,100. Those sort of levels look a long way off and pretty unlikely at the moment.
Right. Mayuresh, what will be your call on the market?
Morning, Pankaj. So largely, I think if you look at the market dynamics at this point of time, my own sense is that the markets might correct from the current levels and probably consolidate at lower levels. You've probably seen IT companies probably disappoint to a certain bit, and again, no great recovery expected over the next 2 quarters. If you look at Pharma, I think the results were disappointing to say the least. Capital goods again looking a little bit patchy at this point of time. Financial and financial services selectively, I think the larger private retail-oriented banks did well. PSU banks, I think relatively better performance, but what probably happens in terms of haircuts going ahead, the government action, the RBI ordinance, and again I think the GST rollout, again that will have some amount of disruptive impact, at least for a quarter or 2 in terms of supply chain management, inventory management, what the FMCG staple companies probably do, or a lot of consumer discretionary oriented companies in terms of their inventory before it gets implemented. Input cost inflation probably eating into metal companies' profits. So largely I think earnings probably will remain subdued for the first half of FY18. The recovery probably can start emanating and coming through from the second half. So I think over the next few weeks, my own sense is looking at geopolitical situations, our own domestic situation with the new series starting this week. Monsoon might be a trigger which have got gestated by the market. So largely I think we might correct a tad bit from the current level. Not a significant correction, but again I think we might consolidate at lower levels because earnings probably are not coming through. But qualitative stocks is something that I'll still be looking out for. If it's going to be a stock-specific approach rather than playing on the markets at this point of time.
Sumit, in terms of levels, what to watch out for?
Hi, good morning, Pankaj. Well, Nifty, immediately yesterday we saw that it has given a breakout. It has given closing at lifetime high levels, and now looking at the chart, it seems that there is a possibility that we can see a upside move in Nifty. I think immediately 9400, 9440 would act as a support for Nifty. Until the time these levels are not taken away on downside, one should remain on buy side. Immediately 9523 would be the resistance, that would be the lifetime high levels, and if that is taken 9532, if that is taken away, then from there on we will see a decent upside move in Nifty, in which we can see levels of around 9600, 9650. And overall, as I mentioned earlier also, that we are expecting Nifty to touch 10,000 levels soon. There is a possibility that 9650, above 9650, 9750, 9700 levels soon we will see 10,000 in Nifty in next 2.5 months time horizon. I think if there is any dip in markets because of volatility, then that should be used as a buying opportunity, and there is a very high probability of touching 10,000 levels in next 2.5 months time horizon.
Right. Sumit, can you start with your top picks?
Yes, absolutely. The first pick for the day is SBI. Banking stocks are looking good. Yesterday we saw a very good upside rally in most of the banking stocks. So immediately looking at the chart, it seems that SBI can give a good upside move, in which 302 can be the immediate target, and if 302 is taken away, then we can see a levels of 310 also. For a trading perspective, one should initiate long positions with a stop loss to be placed at 280 levels for the upside target of 310 levels in next couple of days. The second pick for the day is from metal space, and that is Vedanta. Yesterday we saw a very good upside move in the counter. Now looking at the chart, it seems that from here on we can see a move till 245 to 50 levels. So for a trading perspective, one can initiate long positions in Vedanta at CMP with a stop loss to be placed at around 220 levels on lower side for the upside target of 245 and 250 levels. The third pick for the day is Motherson Sumi. We have seen that Motherson Sumi has given a good upside move, and from here on we are expecting the counter to move up and touch levels of around 450 as an immediate target and 470 as an overall target. So for a trading perspective, one can initiate long positions in Motherson Sumi at CMP. If there is a dip of around 4 to 5 points from present levels, then that can be used as a good buying opportunity, with a stop loss to be placed at around 419 levels on lower side for the upside target of 450 as an immediate target, and then we can expect extended move till 470 levels in next couple of weeks.
Right. Sajeev, you said that you would be looking at some quality stocks when they go down. What will be those stocks? Which are the stocks that you were referring to?
Well, there's been a correction in some of the housing finance stocks. So Dewan Housing we've liked. Motherson Sumi, which has just been mentioned. It's not fallen so much. It's actually done very well after the results. It's a rich valuation, but it's a stock that we like, and we can see much higher levels if you're a patient, longer-term investor. From the banking side, IndusInd Bank also fell quite sharply from over the last week, but it's bounced back, so that's another stock in the banking sector. So I think our focus is mainly on the banking, obviously, in the financials. They've seen a correction, but that's the sector, and that seems to be the sector where the FIs and domestic funds still seem very bullish on. There might be a bit of froth there, there might be some overvaluation there, but it's still a sector which, if the Nifty is going to 10,000, I think will be one of the outperformers.
Right. Mayuresh, your picks?
So Pankaj, again from the banking and financial space, ICICI Bank is something that I'll remain very optimistic about. Considering the kind of recognition that they've done, and even if one expects slippages probably to continue, not at the levels that we've probably seen in FY17, but largely Q1, Q2 still having some share in terms of recognition on the balance sheet. I think the credit growth cycle as it revives, and with the kind of advances growth on the retail side that ICICI Bank has come out with over the past so many quarters, I think it stands in a very good position as far as improving its return ratios are concerned. So I think ICICI Bank is something that I'll continue to prefer. As Sajeev was mentioning, I think in the housing finance space, Dewan Housing looks very attractively placed at this point of time, with 2,000 odd crores coming in from the insurance stake sale. The capital adequacy has shored up by 400 odd bips, and this probably gives it the leverage advantage over its competitors and peers. What it also does in terms of asset quality pressures, what we've probably seen over the past 2 years, the worst probably in terms of asset quality recognition is there in the stock price. And in my opinion, again, as credit costs start coming down and receding over the next few quarters, I think the ROAs can improve significantly to 1.4, 1.5. The ROE is close to 16, 16.5%, and at 1.35, 1.4 times price to adjusted book, looks very attractively priced at this point of time. The third stock again that I like from the mid-cap universe is Navkar Corporation. I've repeated this time and again, but any significant decline onto this counter becomes a very good long-term bet for long-term investors. It's more about gaining market share, specifically from the WAPI trade that goes and flows through to JNPT with its ICD and rail connectivity. I think the import saving costs and the export costs that a lot of importers and exporters will probably save will probably aid to the volume growth that Navkar is probably looking at. And it has got the capacities on stream. Again, the South Gujarat volumes, it was bulkier volumes which it was rejecting because of non-capacities that the company probably had over the past few quarters. As new capacities have started coming through, specifically on its WAPI, ICD and logistics arm as well, my own sense is that the earnings growth in the second half of FY18 can be significant for Navkar.
Right, these were the topics coming in from our guest. Let's look at some numbers as well. So Cipla, of course, declared numbers. Numbers came out post-market hours. On the face of it, the numbers are not looking good, but that's not a clean set of numbers. Even if you would adjust for that, margins are way lower. These are numbers of Cipla on your screen. A loss of 61 crores versus a loss of 92 crores. Now, these are not clean set of numbers. There are some write-offs. There are some changes. But even if you adjust for that, it's a decent amount of big miss. 3,582 crores in terms of sales versus 3,314 for the sales numbers. EBITDA came in at 506 crores. Last year, of course, was a whitewash sort of a quarter same time, but this time around expectations were high. Margins have come in at 14.1% as far as EBITDA margins are concerned. So that's what you're looking at in terms of margins. And domestic formulation sales were down close to about 4%. In fact, that was the key thing in terms of the numbers. Management has refrained to give a 2018 guidance. Their R&D spend would continue to be higher at 8 to 9%. That's the pre-open price at the bottom of your screen for Cipla, 483, looking in on the lower side. Sajeev, what would be your call on Cipla or the Pharma pack?
Pankaj is still an avoid. It's gone through a tough time. It's been a sector which has always had problems with the US FDA. It had a period of a year or so where the stocks outperformed. You've seen the prices have corrected, the valuations look much more cheaper. And normally it'd be a sector like this where we'd look to be a bit contrarian, but I still feel that there's still a lot of negative news flow that can come. You've got a new administration in the US, which may not be so easygoing to these companies. So if you're going to be very, very aggressive and you've got a higher risk appetite, then maybe you can start looking at stocks like Cipla. Maybe Biocon's a bit safer, or Syngene, maybe some safer stocks, but generally it's a sector we prefer to avoid, considering there's so many other opportunities in the market. You're paying a premium in the rest of the market, but there's just too much negativity and uncertainty in the pharma sector, and it's not a cyclical which can suddenly turn around based on sudden demand, so probably best to avoid in the short term.
Right. Mayuresh, what will be your call on Pharma pack?
No, again, Pankaj, one really has to readjust his or her multiples that one probably envisaged at the beginning of this fiscal. Pricing pressures in the US are very, very obvious, as seen from a lot of pharma companies' numbers. Yes, a lot of pharma companies might be having a very strong pipeline, and we were very, very hopeful in terms of the pipeline probably getting again activated in terms of revenue recognition as these drugs get approval. But largely, again, I think the pricing pressure and the erosion from competition has largely eaten into their top line. As far as the EBITDA is concerned, I think you've obviously seen huge amount of R&D spends come through. There have been a lot of remedial and remediation costs that have been eating into the EBITDA margins at the operating level, and that probably is emanating into lower bottom line for a lot of these companies. So pricing pressures are very well going to continue. I think the approvals are going to come at a very gradual pace. And though the sector probably looks in doldrums at this point of time, I think it's a readjustment of your PE multiples. For example, I think if you're multiplying Lupin at 21, 22 times, I think that multiples probably have to get readjusted on the downside in terms of visibility, both in terms of new drug launches as well as price erosion from the existing drugs that they're probably launching or expected to launch. So largely, again, I think the strong buys that the street had a conviction about probably are dissipating at this point of time. But again, I think declines, qualitative stocks, if one really elongates its time horizon to 2 years, I think stocks like Lupin still, I believe, may offer value. I think Sun Pharma has gone beaten down to a level where valuations have become so attractive that any positive trigger on the stock can create reasonable upside. So I think the multiples have reduced, but I think reasonable upside still remain onto these companies.
Right. We'll just come to know what will happen as far as markets opening for Cipla is concerned. The pre-open session is indicating a 4% decline. Markets have started. It started around the 4% decline mark. That's Aurobindo Pharma for you. Flat with really no change as far as Aurobindo Pharma is concerned. Cipla on your screen. 483, 480. That's where supply is now trading at. So it's reacting to those numbers. IOC, second day into numbers, you'll hear from the management at 10 a.m. 428 as far as IOC is concerned. Straight away a 10 rupee decline for the stock. Tata Steel 486, Hindalco is flat, absolutely flat, no change. Dr. Reddy's, there is some news flow over there. We'll focus on that. It's up close to about 3 to 4 odd percent, 2,502 for Dr. Reddy's. That's Cipla for you. It's off the day's lowest point, and there was some sort of decline going into the numbers. So maybe the markets did see these numbers coming in, and that's why probably you just get a sense that it's not reacting the way it should have otherwise. That's Indian Oil Corporation for you. That's about 3% in terms of decline, 425 from the word go. Remember, it's already a MSCI index, so it has that buying over there, but still it's looking on the lower side. That's Britannia for you, up about down about 0.5% or so. So that's going on the lower side. And NMDC down about 2 odd percent. That's around 113 for NMDC. That's a results impact for you. That's NMDC for you. Let's look at some of the other companies that are reacting to numbers. So you have Emphasis BFL. Again, you will hear from the management in just a bit. Flat, really no volume at this point of time. So difficult to say, what's happening as far as these names are concerned. Balkrishna Industry is up around 1% or so, 1,501, 1,507 for that name. Hotel Leela down about 1.6 odd percent, 2327 for that name. Manappuram Finance 3% higher, that's around 91 rupees for Manappuram Finance, 2 to 3 rupees on the higher side. That's again a results impact for you. Heidelberg Cement is up 3%, 45,000 shares in terms of trading, so that's doing pretty well. Subex Limited is down about 2 odd percent. Again, it's a company that's reacting to numbers. Let's pull up some names that are reacting to news flow or a second day into row in terms of numbers or movement. So you have a Dish TV which is up close to around 4 odd percent. You have a Voltas which is up close to around 2%. Remember, Voltas has done very, very well earlier as well. Interglobe Aviation 1,088 right now. That could be reacting because because of crude oil prices going down some 5% overnight. So that is a possibility as far as these aviation names are concerned. Nalco is a part of FNO now. It's up around 1.2, 1.3 odd percent. You have RBL, which is a part of FNO from today, so that's doing decently well at this point of time. These are companies that have been added on as far as FNO series are concerned. 549 for RBL at this point of time. Sajeev, what will be your call on aviation space with crude oil prices or outlook for crude oil prices being bleak? You think aviation is a strong buy now?
Well, some of the stocks like Spice, Indigo have done pretty well, but if you're playing them on the basis of oil prices, then again you're watching the oil prices on a day-to-day basis, which is not probably the best way. The traffic and the passengers is obviously increased. So it's a steady sector. I mean, Jet Airways is a highly volatile stock. We see a lot of trader interest in it rather than longer-term investors. So it's certainly a sector that if you've got the momentum and the feel for it, you can go long. But if you're looking from the oil price perspective, then I'd prefer to trade the commodity directly. But the top picks would probably be SpiceJet and Indigo. I think they're safer and they've proven that they can deliver good results and good value to shareholders over a period of time.
Right. Mayuresh, what will be your call on aviation pack?
No, largely I think let's understand that with crude falling down and expected to probably stay in a range, I think it does benefit aviation companies because it does form a substantial part of their input cost in terms of ATF pricing. Secondly, I think in terms of rupee denomination, as the rupee is appreciated against the dollar, I think a lot of the recognition probably happens in dollar terms. So that appreciation part of rupee in terms of their import costs, again beneficial in terms of the translationary nature as they recognize that on the P&L. Third, I think the regional UDAN scheme, I think though it will take time for it to kick off in a significant way, I think it does boost airline operators like SpiceJet and other operators as well, who probably can have maximum utilization of their existing aircraft. As far as numbers are concerned, probably the sensitivity in terms to ATF pricing is pretty large for these companies. But again, with expectations of crude staying in the range and with expectations of load factors expected to improve, my own sense is that selectively companies within this space can be looked at. SpiceJet on declines is something that I'll still continue to prefer in the aviation space.
Right. Sumit, what's your call on Voltas? Last 2 days, it's up some 18% or so.
See, overall, the counter is very strong. In last couple of days, we have seen the very good upside move in the counter. So there is a possibility that we can see some consolidation at present levels. But the overall structure is looking very good. Immediately, this stock is headed for 500 levels. And if 500 is taken away, then we can see extended rally too. But the immediate targets for the counter is 500. In last 3 days, we have seen that the stock has moved up from levels to 45 levels. So it's not good to buy or to initiate fresh long positions at CMP, but those who have taken positions at lower levels, they can hold on the existing long positions. And if there is a correction of around 15 to 20 points from present levels, then one can again have a fresh long position somewhere at around 470 levels for the upside target of 500 levels. Immediately the stock is headed for 500.
Right, but do you think the momentum will continue to be strong? I mean, some of the other consumer durable companies have not done that well. Do you think the momentum here will continue to be strong?
Because looking at the chart, it seems that there is a decent buying taking place in the counter. As far as other consumer durable goods stocks are concerned, we have seen a decent rally in other stocks also. Like Havells is also doing good, Crompton Greaves is also doing good. But the way Voltas has performed, they have not performed. So no doubt, Voltas is outperforming among all the other stocks. So I think the momentum should continue. That's why I've said that those who have taken positions at lower levels, they can hold on their existing long positions for the targets of 500. I think we can see 500 levels in next couple of days.
Right. Sajeev, Dish TV was down yesterday on the back of numbers. Today is up 5%. What's your call there?
Difficult stock to predict, Pankaj. It's had a nice run up for quite some time, but it never broke out from the 100 to 105 levels. And clearly the results are disappointed. There's some fierce competition in that sector. And with the Reliance and coming in and the other big companies, it's going to be difficult. So if you're a speculator, maybe you could sell the lower puts, the HVB puts, hoping that it doesn't break that level. But I don't see much upside beyond 90, 95. That's still about 10% from the current levels. But I think on any significant rally, there will be a lot of traders looking to short sell the stock again or lighten up their position. So a difficult stock in a difficult sector at the moment.
Right, and any view on Voltas?
Well, a great stock which has had a very good run up. It's a stock we've liked. The valuations again look a bit rich, but if they continue to give results like that, then you will see the stocks rewarded. The clear thing in a market which is highly priced is that if the companies continue to deliver good results, they give the analysts and investors and traders an excuse to keep buying or buying on the decline. So certainly a stock that you could look to buy on the declines, and if you've got the stock, probably hold on, keep a stop loss maybe 5–10% lower, but otherwise I wouldn't be in any particular hurry to exit a stock like Voltas right now.
Right, Mayuresh, in terms of consumer durable, what's your call?
No, so largely I think this space, Pankaj, is expected to do well over the longer time horizon, but as I said and I mentioned, GST probably can have some amount of temporary disruptions in terms of how the inventory cleaning up will happen for the existing part at the dealer end, what kind of discounting actually comes through. And again, I think the supply chain management and the logistics thereof over the next 2 quarters as it gets implemented is going to be extremely key. So I think implementation in terms of GST for consumer discretionary stocks, whether that be staples or FMCG, are going to be crucial. But over the longer period of time, my own sense is that as the competition probably moves from the unorganized to the organized pie, and though I think tax rates might have come down for selective few categories, gone up for selective few categories, I think the pass-through will happen at either end. So for categories where the pass-through is much higher, I think the pass-through will happen, whether that gets compensated with adequate volume growth. My own sense is that demand dynamics start coming back. We were expecting a very good monsoon this time round as well. So the Kharif output is expected to be on a robust side. The Rabi output obviously has seen significant improvement. So I think the discretionary spending patterns are bound to increase on the semi-urban and the rural side. Urban side, I think with inflation staying down, I think the inflationary impact in terms of consumption patterns should not get affected significantly. So as a sector, I think we like consumption discretionary. We'll be very, very selective though in FMCs because valuations probably for a few stocks have gone over the roof. But generally, I think this theme is something that I will prefer and remain extremely bullish upon, and that will include FMCG, consumer staples, auto ancillaries as well.
Right. Sumit, in terms of some of the other market movers, can you tell us about the oil marketing companies? IOC, they have declared numbers. What is your call over there? The stock has not done anything though.
See, most of the oil marketing companies are looking very good on charts. Immediately, in last couple of days, we have seen that the stocks have given some correction, and now there is a possibility that we might see some more correction from present levels. But the overall structure is looking very good. If there is any correction in BPCL, IOC, HPCL from present levels in next couple of days, then that should be used as a buying opportunity. We are expecting a move of around at least minimum move of around 15 to 20% in next couple of months. As far as your question on IOC is concerned, there is a possibility that we might see a fall of around 20 points from present levels. That means on downside we can see levels of around 410, 405, but the overall structure is good. So the overall targets which we are expecting in the counter is 450, 455 is the immediate target, and then overall we are expecting counter to move up till 470, 480 levels. If there is a dip of around 10 to 15 points from present levels in IOC, then that should be used as a buying opportunity. Immediate resistance for the counter is placed at around 445, 450 levels, and if once the counter is able to break 450 on high side, then we can see extended move till 470, 480 levels. So any dip in this oil marketing company should be used as buying opportunity.
Right, Sajeev, just a word on the oil space. Do you feel that that's a sector that can do well? Some of them have started to give returns. What's your call over there?
Well, oil marketing, as has been mentioned, is a good sector. With the deregulation and the free pricing, they can obviously do what they want from a business perspective. There was some negative news on the implication of the GST on the taxation, which might have led to some slight correction. But the longer-term outlook is still very positive for these stocks. If you're talking about stocks like ONGC, Reliance, they've been going through a pretty tough phase. Reliance mainly went up because of the impact of Geo. But the long-term outlook, probably not as strong as it was over the last few months, but the oil marketing would be much more a sector we would prefer than a direct play on Reliance or ONGC.
Right. Thank you so much, gentlemen, for taking out time for us. Always good to get a perspective for you. Just before we go, Mayuresh, let's start with you. What are your disclosures?
Pankaj, of all the stocks we've discussed, no personal holding, but we may have discussed these stocks with our clients, and we may be holding these stocks on behalf of our clients in our funds.
Sajeev, for you?
Standard that any stocks we've mentioned alongside personally and clients would certainly have long positions in.
Sumeet, for you?
All the frontliner stocks, Pankaj, which we have discussed on NDTV profit, we have discussed we keep discussing the same stocks with our clients on regular basis. So it's better to assume that our clients might have positions on the views which we have shared on NDTV profit. Thank you very much.
Thank you so much, gentlemen, for taking out time for us.